We have Sanjay Parekh, who's with us. He's founder and CIO at Sohum Asset Managers, veteran really at asset management. Sanjay, great to have you with us here. Good morning. Thanks for your time. Appreciate it. What's the feel of the market like? I mean, as we kind of now look ahead into this new Parliament session and the budget finally, as we sort of go into it. What's your sense? How are the markets likely to behave? It's a sort of near-term question to you, so maybe a little unfair. But what's your sense?
Yeah, so I mean, as we all know, structurally we are very, very positive because all the balance sheets are in place. But valuation is what discomforting to all of us. But having said that, it could be a time correction or 3 to 5% price correction, and after such rise, it is very normal to have. Having said that, in mid and small cap, as we know that the valuation, overvaluation in certain segment is very high. So it will be stock specific that we need to go, and also we have to keep in mind that there are few events like monsoons initially is below normal on an average. The Vahan data on auto also has not been great, and of course the Telangana farm loan waiver. While normally the states have to bear it, but it certainly doesn't augur well from an overall banking system perspective. So when a state government decides to do such populism, it does have a ripple effect on the banking system, even if it not directly. So certainly we have to keep all this in mind because, pre-elections, there were impact on demand in the first quarter in certain segment, as we hear, even in the first or 2 months in cement, autos, we are already visible. So, we'll have to keep these expectations right. And then, as I said, the structurally we're very positive, but we could have a pause or a reaction as well.
Sanjay, morning. In your portfolio or recommendations, did you have any stocks with exposure to the MFI sector where the stress is now increasing and companies are talking about it bringing down their growth forecast? And is it time to turn cautious? Which would be the stocks which could get impacted because of what we've heard from Ujjivan Small Finance Bank?
Yeah, so, yes, as they did say, all of them are talking about gradual increase in credit cost. It's just that, whether the credit cost remains in a band, because the ROAs after even the credit cost, if it's in the band, are still very good. So if, let's say, they can manage it at 3% or so, and you then get an ROA of 4.5%, then it's fine, it's worth the business. But if it escalates, which is because it's an unsecured piece, and due to such announcement by the state, as I said, it directly doesn't get affected, but on the credit culture, it does have an impact. So hopefully it is not pervasive, and hence we will have to watch. And such state government's populism, particularly from, because this is not from the BJP government, it's from the Congress government. There's little that can be done, It's the state exchequer which will bear it, hopefully. And there will be certainly an impact on credit culture. So we'll have to watch it as it comes. And hopefully, these companies can maintain the credit costs in a band.
All right, just keep an eye out on a couple of these defense-related stocks. Mazagon top, for instance, is up around 4% right now. It's been a big mover and continues to move higher. This one could be attributed to some of the news reports that are there this morning where, they could be in advanced talks with regards to Kalavari submarine deal, which could be worth anywhere between 35 to 36,000 crores. These are newspaper reports, so that stock is buzzing around. But, Sanjay, I just wanted your thoughts on this entire rail and defense theme, because everyone's been speaking about how they've run up ahead of expectations, ahead of what the street is, what the fundamentals could be, etc. But there is still no stopping this rally. And day and again, there are new news pieces, order wins coming in. How much is too much? Right, we'll just try and repatch that connection. Meanwhile, we're speaking about that, rail and defense. Look at Ircon, up around 4% right now at the high point. We have RVNL, which is up around 4%, again at the high point. Defense-related stocks, Paras Defense, for instance, up around 3%. when you're looking at Mazagon Dock, you also look at their twin, which is Cochin Shipyard, because both of them move in the same direction. Cochin Shipyard has moved higher. We were talking about Titagarh earlier. Look at Texmaco. That's too higher by about 2.5%. So a bunch of these stocks continue to do well and continue to make the highs of trade, even when the broader markets definitely, are looking a little shaky, with more stocks declining than the number of stocks which are advancing.
No, absolutely. RK Forging, Mangalam, I don't know if there's any news flow. 7% pop there. We'll have Sanjay back with us in just a bit, but look at RK Forging. It's a sharp move on very large volumes on that one. There is a Glaxo, which is showing up. I mean, some of the new stuff which was not there in the mix in the morning at 9:15. Glaxo is up about 5%. There is actually volumes are picking up now on the upside as well. I was talking about how volumes perhaps a little bit more on the downside than up on the upside, but I think it's picking up. Raymond is up about 4%, 26.25 on Raymond coming through. There is what else? JK Paper, I think I saw that in the, right at opening, 5% higher. So yeah, I mean, that's essentially broadly the list that we have. Mangalam, I think we have Sanjay back with us.
We do have Sanjay back with us. Sanjay, you were talking about how some of these broader market plays are looking like they've done their course, but price is telling you a totally different thing. I'm looking at the defense and railway related stocks.
Yeah, so, Mangalam, valuation again, we participated way early in one of the companies, Jupiter Wagon, and we sold it as well. And from there, it's up 70%. So, valuation is which I think most of the mature participants are not comfortable with. And I think, again comes this retail, active retail with 15 crore demat accounts and 4 to 5 crore active demat accounts. And each of them have individually, as a bunch of together, are a phenomenal power. So, that is where I suppose, both railways and defense, the theme, because they would not really discuss too much on valuation. And hence, they would more give importance to the price, which is done very, very well. And the momentum is there. Having said that, now valuations for a lot of them are discomforting, and that's where we are staying away from them.
Got that. By the way, to your portfolio, Sanjay, from the last time that we actually, not from the last time that we spoke, but in the, have there been a few new additions? I mean, publicly disclosed in what you've kind of picked
Not
on?
not much actually. We've just added one name in the infra space, but otherwise nothing that may have changed major.
Did you see this, the announcements with regards to GST? The changes, etc., which were made, but also the changes which were not made. There was a lot of expectation that maybe they will sort of moot the proposal of bringing gas under the ambit of GST.
Right.
Petrol, diesel, etc., may be more contentious. But any thoughts on these areas?
No, it does. I mean, it looks difficult because, there are impact on exchequer as well. So there is impact on input tax credit that one today doesn't get, but later on they may have to give. So I think the petroleum products is a contentious, even if it is on the gas side, it's not easy, to get a consensus, and then the impact on exchequer as well. So that piece, we are also less hopeful. So that's a view we have on the GST. The rest, of course, the rest of it have not followed.
You're quite underweight on oil and gas, right, Sanjay?
Yes.
Across all the categories?
Yeah.
Refiners, oil marketing companies, gas, etc.?
Yeah, so we had HPCL and BPCL and we made significant money, and then we said, so when we bought, it was really cheap and people were overly worried on, the deregulation, whether it'll happen, not happen. And at that time, it was really dirt cheap to buy in. And then, of course, they moved in 70-80%. And of course, we also got the dividends at our cost. The dividend yield we got was 6-7%. But then the risk return did not turn so favorable. And having said that, we've seen the outcome of the elections, and it is not a very clear mandate, as we know. We have coalition government, and hence, at least we believe that it will not be easy to have regulations with a total market-led pricing for petrol, diesel, given the mandate they've got. We'll have to see how they manage this and navigate it. But that is one area where, let's say tomorrow crude goes up $10, whether the oil companies will be allowed to be market driven, given inflation was a very big issue in the rural India. And hence we want to watch this before we take a call, and hence we are underweight on it.
Let's quickly wrap it up then with your view on the IT space. I mean, there are two schools of thought. One, that it is in for structural derating, or secondly, it's a value bet, the only place where you will get good stocks at reasonable valuations.
Yeah, so we were underweight almost 2 years, significant underweight at just 5% weight. We recently, last a little more than 1.5 months, we increased our weight a bit, but our underweight is still there. So here now, they will have a tough year this year, but the long-term story of can they be at 8 to 10% dollar revenue growth with ROEs and ROCs being so good, payout ratios being so good, and at this juncture of market, the risk return, if your expectation is you make 10 to 12% return and 2, 3, 4% dividend yield, if that suffices, it makes sense to increase the weight bit. Having said that, we are still underweight, and we will look at, because this year is going to be challenging, is what we strongly believe, with a low growth. And last 2-3 years also has been mediocre growth. So one has to be gradual, but the character of the business is very, very good. So once the growth is back, certainly, stocks can move up. And that's how we are cautiously increased our weight in 2 of the large caps.
Okay, Sanjay, you've given us our cue to invite the next corporate on our show. Thank you very much for joining in. Let's talk about